So then we can share it to the group, whoever didn't get to come.
Sure. Let me raise this a little bit. There we go. That's better. I don't know that everyone is, well, most people don't have their microphone on. You have to hit unmute and also video. More people. There we go. Filling up.
We're gonna do this, are we? Video on?
Yes, we are.
You don't have to hide, Celia. You have a relative by the name of Bonnie?
I do not.
Okay. And nobody else has their audio on.
Okay, it's gonna be a few more. Okay, I'm Effie Carson. I run the Laneway Suites group. Just to let everyone know, I am recording this so that we can share it later. I'll keep admitting people as they come up on my list here. This is Rami Miransky. I just met him on Facebook last week, and we've had a very long conversation about HST and how difficult it is to find people who actually know the ins and outs of this part of HST. You'll easily find accountants and bookkeepers who can help you with HST for your business, for your how much you collect and how much you recoup from input tax credits. But this is kind of a whole other ballgame.
Yeah, no, definitely. Just a little bit of my background. I've been a financial planner advisor for the last 25 years. Last couple of years, my son is more taken over the business, but I'm still involved. But about 10 years ago, two of my clients built new homes. I was familiar with the rebates that existed for people who do that, got them back the money. And it was significant. It was $16,000, so they were very happy. But in my dealings with the architects and the contractors and the trades and designers, et cetera, there was a huge gap of knowledge with respect to how HST impacts new residential real estate. And so through the course of the last 10 years, I've learned as much as I could, helped hundreds of people understand real estate agents, or, lay people just building their own homes or renting homes or buying for investment, et cetera. Understand the implications, recoup their rebates if they were eligible. And laneway homes now is becoming a very big issue because people don't understand the HST implications of building a laneway home. So there's three situations. You build a lane, you own a home, which is your main primary residence on the property, or in fact could be an investment property with a duplex or a triplex, et cetera, and you build a laneway home. Now it can either be for yourself, it can be for your immediate family, or it can be for rental, and each of those have different implications. Is there anyone here, and most of you have your microphones off, and I'd like this to be sort of a more easygoing kind of talk. If you want to jump in with a question, feel free to ask. Is there anyone here who has completed their laneway home, or are most of you just in the process of getting the permits or building it? It's in the midst of construction. Celia, at what point are you in the process?
My architect has just submitted for pre-approval. So
Okay.
I'm very preliminary.
Okay. Looks like,
but I plan to live in it. And then I will rent out my main house.
okay, excellent. Okay. And Michelle, you look like you're going to say something.
Yeah, we've completed ours and we've been renting it for over a year.
Okay, and are you aware of the HST implications?
No, I'm not. That's why I'm here. But we actually deferred everything for taxes for this, like for 2021.
This has nothing to do with your income tax. This
Oh.
has everything to do with the HST on the laneway home itself, which is a whole different issue. And we'll get to that. You know what? I'm going to address your issue first because it's the most complicated. Celia's, you're easier. So Michelle, you are considered, anybody who builds a laneway home for the strict purpose of rental you are by definition called, it's a different definition, but from the CRA rules, you are a builder. Whether you have hired somebody to do it or whether you have knocked in those nails by yourself, you are considered a builder because you are engaging in a business activity to create this residential complex, which is going to be rented. The first point I'm going to make may scare you a little bit. On the point that you signed that 1-year lease a year ago, you had an obligation to determine the fair market value of that laneway home. How much is it worth? It's not that easy an exercise to do because laneway homes, you know, it's a new structure that sits on a very small piece of land on your existing property. And Michelle, I would assume that you have a main house attached to that on the same property, on the same legal property. And you cannot sever that property. So it's difficult to figure out what that fair market value is. But you were supposed to determine that fair market value. And let's say you spent $450,000 and you get a professional appraiser to determine that the fair market value after construction is, let's say, $500,000. 13% of $500,000 is $65,000. You are supposed to remit that to the federal government. However, that's the bad case. The good case is you can deduct all your input tax credits, all the HST you paid on construction against that $65,000. So in the example I just gave you, if you built it for $452,000, that's $400,000 plus $52,000 in HST. You can then take the $65,000 that you owed the government and deduct the $52,000 from it, and now you're left owing the government $13,000. And now there's one other thing that you can do. You can apply for the HST new housing rental rebate, which is $24,000. So if all those numbers work out as I'm explaining them to you, the government will owe you $13,000.
Okay, can I ask
That's the
questions?
good news. That's the good news if it all works out. But even if it doesn't, you don't want to wait too long. There is a 2-year, Michelle, there's a 2-year limitation period to do this. And in fact, you had an obligation to send that $65,000 into the government the month after, the month end of the month after you signed that 1-year lease. And I'm assuming it's a 1-year lease.
Yeah.
Or a long-term lease, correct?
Yeah. Yeah.
Okay. There may be some interest coming, but you don't want to ignore this issue, and I tell you why. There's a 2-year limitation period to apply for the HST new housing rental rebate. Right now, the laneway business is starting to explode in the GTA. There's over 200 units being in various stages of completion or with permits that have been applied for and approved. It's going to take a little bit of time for the federal government, the HST, the business department of the federal government, to catch up to this. But if they see, hey, you're going to be declaring rental income, they'll say, hey, okay, Michelle's declaring rental income, let's see what that's all about. And they say, oh, there's a laneway house there. And they come to you 2 years later and they say, Michelle, you didn't do the fair market value assessment. You owe us this $65,000. Yes, you can deduct the $52,13, but you've run out of time. Sorry, you're over the 2-year limitation period to apply for the HST new housing rebate. So instead of being up 13, you're going to be down, 12 or 11 or 12. Okay, so it's something that you have to address.
Yes. So to get the fair market value, do we need to get an appraiser to do that and put it in
Most
writing?
appraisers will walk away from this thing. They'll say, I don't touch those. I mean, even financial institutions, I had a case just recently where someone was reassessed the value of that property after having built a laneway home by MPAC, by the Municipal Property Assessment Corporation. They didn't change the assessment. Even they don't know how much these things are worth, but they are worth something. You cannot tell me that a house that has a basement rental, and Effie, you can attest to this being a real estate agent, is not worth more than an identical property that doesn't have a legal basement apartment, correct? Effie? Effie, your microphone's not on.
I got some cross talking here. I'm going to try and mute a few people.
Okay.
Sorry, rephrase your question.
No, I was saying that you cannot, when I was talking about MPAC not changing the reassessment with a new laneway home on there, it makes no sense to me. You cannot tell me that, let's say it's not a laneway house, let's say it's two equal properties, one has a legal basement apartment that is generating income and one doesn't, which property, everything else being the same, which property is more valuable?
Obviously, the one with the income.
And
Yeah.
so a home with a laneway home should be more valuable than an identical property that doesn't have a laneway home. It's going to take a little while to catch up, but I do have, I mean, if you do need referrals for a couple decent appraisers, I know a couple who will venture into that because they've had some experience in it.
Great. Can I just ask one more question about that?
Of course.
Is the process, can I apply for the rebate first, or do I have to
It
send
should
them
be done
money?
all together. No, they're good. No, it should be done all at once. There's 3 different documents, but they should be all submitted at the same time. Get your fair market value, get your, because they won't release the rental rebate until they've seen that you've done the fair market value assessment.
Okay,
So they won't do that. So it's a moot point to do that because you won't get the money back first. You should do them all together. There's 3 documents. First, you have to do the fair market value. Then you gather all your invoices related to construction to determine how much you paid. And that includes everything related to construction. All your trades, your contractor, your plumbing fixtures, your lighting fixtures, even your appliances.
right, okay.
Not furniture, not custom window coverings, but everything else qualifies.
Okay, and is this a document? And like we
It's
get how,
3 different documents.
sorry,
3
the
different
part where
documents.
we need to add up all the HST that we paid, do we just collect our receipts? And then there's a document that says how much did you pay, which is the total?
Well, you figure out the total, you back out the HST.
Right, but is that a document itself about how much did we pay in HST, or that just goes as part of the?
No, it's
No.
actually a separate document that you'd have to fill out and say, here are the, they're no longer called, when you do it this process, they're no longer called ITCs, because ITCs, they're really for businesses, ongoing businesses. They're called refunds of the HST paid on construction. It's just the terminology, but it's a separate document where you have to say, here's what I paid in HST on construction of this laneway home.
So
You
just to
gather it, and you add it all up, and you have to figure out what
Okay.
the HST is.
clarify, Rami, you
Yep.
don't submit the actual receipts, you submit.
No,
the
but they may
numbers.
want to ask for them. They
Right.
will, just like your income tax return, you don't have to submit all your various receipts, but if they do ask for them, they'll have to have them and supply them. Okay.
Okay, so the 3 documents are the fair market value document, the refund on the HST construction document, and the new housing rental rebate. Is the refund on the construction one specific to laneway houses, or is it just a building one?
No, it's any new construction. It doesn't have to be a laneway home. It could be any home. It could be a main residence, it could be a duplex, anything that you build for the purpose of long-term rentals. Just so you understand why it's, and people say, why is that true? Well, if you were to build that unit for sale, any new construction is subject to HST. Any new residential construction is subject to HST. When you buy a new condo from a developer, you're going to get charged HST. You buy a new subdivision home, you're going to get charged HST. Oops, sorry. When you build, you're going to say, well, why do I have to pay our HST? Well, because let's say you had 2 neighbors. One was building for sale, new construction for resale. One was building for rental purposes. The person who lists the home for resale, it's new construction, it's subject to HST. Let's say they listed it for $1 million. They now have to charge it. The sale price is 1.130. because you have to charge 13%. What happens to his neighbor who is building the identical home for long-term rental? What happens to that HST? Well, you might say when he sells it down the road, you charge the HST. No, because at that point, it's become used residential real estate and it's not subject to HST anymore. So the moment they sign the lease, whether it's a laneway home or a single family home or a duplex, you must self-assess, and there is a deemed disposition to yourself. That's why you have to determine the fair market value. It's to create an equal level playing field for people who build to sell versus people who build to rent. Okay. So that's
Randy, Christian has his hand up.
okay. I'm sorry, I didn't see. Christian, yeah.
Thank you very much. Hopefully, Michelle, you got your questions finished there. I just have a sort of correlated question. I just built a brand new house and a laneway house. And so I was going to apply for the HST rebate on my house, which is principal.
Yep.
And my garage is part of the laneway house, but it's part of my principal residence. I have exclusive access. So I was just about ready to submit it, but wanted to see this.
Well, you're eligible for
discussion.
2 rebates here, Christian. You're
Okay.
eligible for 2. You're eligible for the HST new housing rebate for owner-built homes. That's
Yeah.
called the GST 191, and you're eligible for a rebate, maximum rebate there of $16,080.
Yeah.
And then depending on how the numbers work on your laneway house, now you're in a bit of an advantage because the appraiser really should only determine the value, since you have control and access to the garage and the lessee, I guess, does not, correct?
Yeah, correct.
That should not get factored into the valuation of that whole structure. It should only be the valuation of the rental unit. So you may come out, decently ahead on the laneway home in this situation.
And just on that, just thinking about that a little more.
Now I'm sorry, and I can't comment on where you're going to be. I know for sure that you're going to get $16,080 back on the construction of your primary residence.
Yeah.
But based on how much it cost you to build the laneway home and what the fair market value is going to come in at, I can't really, give you a quantifiable number on that. But you should come out ahead. At worst case, you don't want to create a situation where the government's coming back at you later on, even if you break even, if you're up 1,000 or down 1,000. I think in most cases, people will come up ahead on these situations, but you don't want to wait to do this.
Well, I had an appraisal done. I'm just going to share for everyone. I had an appraisal done to get my construction financing, but it was on both properties at the same time. And it was a very challenging task because I had no comps to show, especially a new house and a laneway house. Those of you may know, a colleague of mine has got one for sale in Goff around the corner, but he did the same thing. But we're kind of blazing new ground here a little bit, and so I was going to hopefully use that appraisal as fair market value. But what you're saying, I think it might be more advantageous to get them reappraised separately.
Oh yeah, you don't want to use that appraisal because that appraisal includes the whole structure. I mean, if it's a couple $1 million, that means there's $260,000 of HST there. But one of those homes, your primary residence is what's called an exempt supply. It's not subject to HST. So, and then as well, the whole land situation as it relates to the laneway house, depending on how much land they have and how much access to that land that they have, is another factor. And as well, your factor when it's only a unit above a garage that they have no access to, I would imagine they don't have, there's a separate entrance to the unit. They don't have to go through the garage, correct?
Correct,
Okay.
yeah.
Separate entrance, they go up some stairs, unit is locked, garage is locked, you have complete access to it. Yeah, so these are all sort of complicating factors that, mix up the fair market value situation with respect to the laneway home.
Okay. Well, that's great. Thank you very much.
And, listen, just as an aside, and I don't want to self-promote here, but this is 10 years ago, when I did this for a couple of clients of mine who basically built new homes and got on the rebate, I've turned this into and I've created a lot of networking with real estate agents, with contractors, with architects, etc. And I help people with these applications. So Christian, if you do need some help, you know how to reach me, and I'm happy to help you. Now back to you, Celia. You are building a laneway home for yourself. It is
it's not I'm repurposing my garage.
okay.
So it's an existing structure that I'm modifying.
It doesn't matter. You are basically turning it into a new residential unit, new construction for the most part. As I said, the government considers new residential construction as gut of up to 90%. I mean, you could leave the 4 walls of that garage intact, and as long as you build new, it's considered new construction. So you're building that, you're going to rent the main house, you're building this for yourself.
Yeah.
And that will qualify for the HST new housing rebate for owner-built houses of $16,080.
16.5.
16,080.
16,080. Okay.
As long, yeah, to get the full 16,080, you have to have a minimum expenditure. The exact number is $302,840. Anything more than that, you cap out at that 16,080. Anything less than that, you'll get a proportionately lower amount. It is actually 75% of the PST embedded in the HST to a maximum of $16,080.
Yeah. Okay.
Okay.
And then
Now, I should digress. Go ahead, sorry.
Can I ask a question? And
Sure.
it's sort of related. I am doing some rent out to my house in order to
Mhm.
get it in shape for tenants.
Yes.
Is there any rebate that I can apply for there?
Well, if you got it more than 90% of it, don't, yeah, because you don't want to do that, because then you'd have to self-assess. And now
Yeah.
you're self-assessing a property that's, worth a $1.5 million, $2 million. I don't know where you live, how big it is. And you'd have to pay that HST. So just do it as much as you need to do. If it's under that 90% threshold, it's not considered new construction and it's exempt from HST.
Okay.
Okay.
Yeah. Okay. Thank you.
Now back to rental. You can rent to an immediate family member, and it's an exempt status. So Michelle, have you rented? And I didn't ask you, Michelle, was it rented to family or was it rented
No,
to?
it's rented to
To an
people.
arm's length person.
Yeah.
So you
an
can
arm's-
rent, listen, sometimes, or you can, or in Celia's case, you could have built it for your mother or your mother-in-law, or a child or a brother or a sister to live in. And that creates an exempt status, and you don't have to self-assess, and you will still be eligible for the HST new housing rebate for owner-built homes. Or you can rent it to any of those individuals, as long as it's that immediate family of parents, siblings, or children. And then it's an exempt status as well, and you're eligible for the $16,080. But as soon as you rent it to an arm's length person, it's subject to all those other rules. The other issue is if you build it for yourself, but don't move out of your home, it's really just considered an addition, and it's not subject to any of those rules. It's like putting on a side addition or a back addition to your home. I had a fellow I bumped into who said, well, I built it, I'm using it, extra space to entertain, for my kids to hang out, whatever. I said, that's totally exempt. You don't have to worry about it. It's just like putting an addition on your home. Okay. So, and Celia, you're in the process. So you cannot apply for these things until things are complete. So you won't be able to apply for the HST new housing rebate owner-built home until you have finished, or it's substantially complete.
Thank you.
That's basically it. If people are in these situations, and I've only heard from a handful of you, but if you are in the process or if you've completed and it's a rental unit, you should get on this situation right away, because you don't want the government coming calling, because if you do it yourself, they may charge you a little bit of interest, but they won't charge you penalties. If you wait for them to come calling, it's just like, your taxes. If you don't file your taxes on time and they have to come after you, they're going to charge you interest and penalties. Luckily, interest rates are pretty low. Interest won't be that severe. If you come back, and I think, Michelle, you'll come back on the positive side, there's probably a little money coming your way.
Okay, I just had a question. Has this this process about submitting the HST been in place for the last few years?
This is the HST housing rebate started in 1991. And there is a limit to that, because they said, hey, you were never charging HST on new residential construction before. Now you're charging, and in 1991, it started at 7%. It's now down at 5% now. But in 1991, you'd get back 36% of the HST or the GST that you paid on new residential construction, to a maximum of $6,300. The caveat to that is, if your home or laneway home or anything is worth more than $450,000, you're not eligible for that federal side. What you will be applying for, Michelle, on the rental rebate is the provincial side, which has been around since July 1st, 2010, when they created HST. They merged PST and GST, and all of a sudden new construction went up 8%. So if you were to buy a new condo, for example, or hire an architect to design a new home, where they used to charge you just, whatever the cost was plus GST, they're now charging you plus HST. So on a $500,000 condo, all of a sudden from one day to the next, from June 30th to July 1st, you're paying $40,000 more on purchase of that building, or 8% more on all the materials and services for building that building. And so the government came in and said, hey, we'll allow an HST new housing rebate on the additional provincial sales tax that you never paid before. But you have to understand that they're not stupid. All of a sudden, a $500,000 condo or subdivision home, whatever it is, impossible to find a subdivision home for that price, but a $500,000 unit, whatever it is now being $40,000 being collected and sent to the government. They're only giving you a maximum of $24,000 back. So, and on $1 million or $2 million on new condos and new homes, $2 million, $260,000 of HST, they're only giving you $24,000 back.
Rami, if I could ask a question,
Sure.
I'm not sure if this is outside of the scope of today's conversation, but we're in a similar situation as Celia, but wondering if you were going to touch on the capital gains implications.
Well, if it's a primary residence for someone in your immediate family or yourself, there are no capital gains issues. The capital gains, and Susan, so are you building this for yourself?
I'm sorry, it was Amy. We've got
who's asking the question? Oh,
it's
Amy.
Amy. Yeah, we're building the laneway house for us to live in, and then we are
Okay.
renting out the main house. Yeah.
Okay, down the lane, you have to determine the fair market value of your home upon, once you don't have to do it for your laneway house because it's an exempt status, but you're changing the use of your main home from primary residential to a rental now. And you're going to have to get a base for the future when you sell that property, because now that main house, only for the time moving forward, the gain. So let's say, it's estimated, if you bought it for $300,000, whenever, 10 years ago or 20 years ago, and it's now worth $1 million, you're not using the $300,000 as your base. You're using the current $1 million or whatever it is as the base. So when you sell that X number of years down the road, that's the unit that's going to be subject to capital gains, not the laneway house.
Remy, can I ask a question?
Yeah.
I wanted to ask you about the division between values when you're talking about an apartment that you're renting on the top and a garage that you're going to maintain ownership on.
Yeah. Well, you're going to have to get a professional appraiser to make that determination. I think the government says as long as your fair market value appraisal is fair, reasonable, and justifiable, they'll accept it. If they see something done by a professional appraiser that says, hey, this unit is worth X number of dollars, they'll probably accept it. But it's in your advantage if you're building a unit like that. Many of the laneway homes that I've seen are just 2-story laneway homes, and there's really no garage there. They're, separate, distinct, two-floor home. In your situation,
in my situation, the garage is just a gutted place for cars.
Yeah.
And so most of the value would be in the property.
Exactly.
Above.
So the appraiser would basically, and you'd have to tell the appraiser, this is what the situation is.
Yeah.
That's the unit that has to be assessed, appraised, not the garage. The owner, I'm the owner. I have complete control over that. The lessees don't have any use or any control over that. It's just that apartment that needs to be valued. And I think Susan, you're on mute because I see a hand there. There we go.
Hi, my name's Rob. I'm with Susan, my wife.
I am really here.
We recently bought a small apartment building, and it's on a laneway, and we're in the process of doing the zoning application for a laneway house, and was wondering if there's any differences in anything.
No, the same process as for Michelle. you'll have to determine when you build that laneway house, and I assume, no, not necessarily now, is that laneway house going to be for your use or for rental?
For rental.
Okay, so you're going to have to, when it's all done, determine the fair market value,
Okay.
gather all the costs associated with building it, deduct the HST payable on the fair market, deduct the HST that you paid to construct it against the HST on the fair market value to get a net, and then apply for the HST new housing residential rental rebate.
Right. Okay. Thank
And
you.
hopefully you come up ahead.
Yeah.
Well, you should.
Hopefully. Yeah. Thanks a lot.
Thank
Okay,
you.
no problem. And anything else? So, great talking to you all.
I have a
Go ahead,
question,
Michelle.
actually, another one, sorry. Is there anything we should know about if we're renting out our laneway house when it comes to filing our income taxes as the rental property? Like that's different from a regular way you submit your taxes for
Oh, it'd be
renting?
on your tax return. If you need a good accountant, I can recommend one.
Okay, so actually, how's the best way to get in touch with you after this meeting? Through Facebook?
Facebook, sure, you can get in touch with me. I think my phone number on the is posted on that posting and advising people that this was happening, which is if you want to jot it down. I'll give it, if you want to jot down my phone number, it is 416-508-1202. You can reach me on Facebook, and my email is Miransky, which is RMIRANSKY@gmail.com.
And
And
Rami,
feel free to pick up the phone. I'm happy to answer calls. Not a problem at all.
you mentioned you have appraisers that understand this market.
Appraiser, I have two. I'll recommend two to you, so you have a choice. I don't like recommending just one person. Makes it look like I've got something going with one individual, which I don't. That's a completely separate issue, but they have some expertise. One of them has, they don't have a lot of.
You're breaking up there.
Oh.
Can anybody hear Rami?
No.
Expertise in the laneway.
Rami, we missed you.
He's a well-known real estate agent. Yep, go ahead. Effie?
We lost about 1 minute, maybe 30 seconds of what you were saying.
Okay, so as I said, I have two. I can refer you to two real estate appraisals who would be comfortable doing them. One has done a number of them. The other one has not as much experience, but came very well referred by someone he's trained, a guy who's had like 40, 50 years experience in appraising properties. Okay. So you've got my cell, you've got my email, you've got my Facebook. Feel free to reach out to me. Happy to answer any questions. No obligation to, to do any business together, though I'd love to be able to help you. But happy to always answer questions.
So prior to the meeting today, I looked on the CRA website and it is very confusing. And I would caution people when they're looking at the form, I forget the form number, if you're hoping to do this yourself, because some people, it's in their nature to do that. When you read the fine print, it keeps making it seem like this does not apply to you. And it does.
Well, I know what you're talking about, because this was written, all these documents were written before the provincial rebate came into effect.
Mhm.
And it will say, if your house is worth more than $450,000, you are not eligible for the rebate. From what I told you just a few minutes ago, that is the federal side of the rebate, which has a cap of $450,000 on the value of the house. So you can't claim the federal side of the rebate. But there is no cap to the rebate on the provincial portion of the rebate. It can be worth, and I've done rebates for people who've built $3, $4, $5, $10 million homes. They're getting their rebate regardless of the value of that property. So it's the provincial side you will be applying for. Now, it's not to say that some of these laneway homes may come in when the appraiser comes. They may say, hey, this property is worth $400,000. You may be eligible for a partial federal portion of that rebate, whether you have built it for a tenant or whether you have built it for yourself. So in fact, somebody who has built it for themselves, if that appraisal comes in at a certain figure, you may get more than the 16,080. You may get a little bit of the federal side as well. And for the tenants, and for one that's built for tenancy as well. Anyway.
There were a couple of questions in, here's something from Nick W. So my scenario is I want to rent the main house and move into the garden suite. Does this mean I will or will not qualify for HST rebates?
Will
I have
qualify.
started.
Yes, absolutely. And that was Nick.
Go ahead.
I'm sorry, who gave that question?
That was Nick.
Nick. So I don't know if Nick's still here. Oh, Nick, he's still here. I see Nick W there. Nobody wants to be seen here. Just a few brave souls. Oh, he's coming. Oh, no. Yes. Okay. We already talked to Nick, but we answered the question for Nick, didn't we? Yes, you will qualify for the HST new housing rebate for an owner-built home for the laneway home. A value of $16,080, maximum $16,080, based on having just over $300,000 in invoices. If you have any more, you're not going to get any more. If you have less, you'll get a proportionately lower amount of the rebate. 75% of the PST to a maximum of $16,080. Was there another question, Effie?
No, someone was just asking what's the rationale for these rebates, and my comment was for the rental unit, it's a way for the provincial government to encourage new rental units. That's the reason behind the rental rebate. Maybe you can clarify more on if you're going to be using it for yourself. What do you think the rationale is?
Well, the rationale was when HST was created, all of a sudden, you know, they knew that we knew HST was coming for quite a few years before it actually was instituted on July 1st, 2010. The developers basically said, hey, this is not good for business. All of a sudden, you're telling me from one day to the next that this unit that I'm selling is going to go up at 8%. That's going to hurt the industry. That was the rationale. Now, the flip side to that is on a $500,000 condo that is being charged an extra $40,000. Oops, did we lose it? Uh-oh.
We're still here.
Oh, I'm gone. All right. Somehow I'm everybody's still there. Let me see if I can.
We can see you.
Oh, you can see me. Okay,
Yep.
it blanked off my screen there. Sorry. So however, the flip side of that is that you're paying $40,000, but you're only getting $24,000 back. So the government's still making money, but the rationale was to give you some of that additional PST that you were paying either on the purchase of new residential real estate or on construction of new residential real estate, because hiring an architect, they only charge you, you know, prior to July 1st, 2010, they only charge you 5%. Now they're charging you 13%. Your architect, your trades, you know, your material, etc., all went up an additional 8%. So you're covering some of that additional PST that you didn't have to pay before July 1st, 2010. The thing is, they have not increased that amount. 16,080 in 2010 is the same as it is today. So you're losing the value of money as well. It'll eventually not be worth that much. The federal rebate that was instituted in 1991, based on homes at the time, maximum of 450. Well, I don't know what the average value of homes way back when in 1991 was, but it was probably in the province, globally in the province, not globally, but provincially, was far less than $450,000, because, you know, here we're in a bit of a bubble in the GTA, but if you're in Port Colborne or Welland or Hamilton or Thunder Bay, housing prices are much lower, and there are some people who build there who still get the HST new housing rebates for owner-built homes, because the value of those homes are less than $450,000. So they'll get some of the federal and provincial. I hope that answers the question. I was a little bit long-winded there.
That's okay. I put it in the chat, but I have some links to the CRA website that I'll be emailing out to everybody, and I'll attach the forms so you can look at them. I think some of them are a bit onerous. The explanations get circular, so you might want to think about getting Rami to help you with that.
Now, you should also, one other fact that I don't know a lot about are, about a year ago, the government set up a green rebate program that, oh, it's on retrofit, so it probably wouldn't apply for here. Those are for people who are, let's say, doing major renovations
Right.
and putting new windows in and putting new insulation in, etc. It may apply if there's an existing garage there, but I doubt it. But there are links there which I can send you as well. I tend to doubt it, but it may
Yeah,
work.
I
It may
doubt
work.
it because you have to have an energy audit first.
Yes,
So if
yes.
it's not a unit yet, then it wouldn't apply.
Fair enough. Good point. Any other questions? I think we're just about to wrap it up.
Yeah, we're just on time. They've given us an extension. I just thought I might comment. Sean Galbraith posted that there's a bunch of neighborhood associations are pushing back on the garden suites bylaw changes. So heads up on that, anybody who's thinking about doing a garden suite versus a laneway suite.
And the rules, by the way, are exactly the same for a garden suite as they are for a laneway suite,
Regarding the HST.
regarding the
Yeah.
HST and the rebates and fair market value, etc.
Yeah,
So please reach out to me in any way that you feel comfortable with, and happy to answer any more questions that pop up and help you if I can.
great. Thank you, Rami, very much for offering your time, and you do a really good job of explaining it and giving a concrete example, and it was very relatable. And thank you, everybody, for joining, and maybe we'll do some more Zooms in the near future.
Appreciate it. Good to
And
meet you
I
all.
will have a recording. I have to figure out how easily that will need to be sent out or possibly posted. Okay. Good night, everyone.
Good night. Have a
Thank
good evening.
you.
I know.
Bye-bye.